127 points, beg your pardon. My screen's not, I guess, updating properly, but we are down quite a bit. 130 points lower, 0.75% at this point in time. And we are now very close, significantly closer to that level I was talking about, which is the 20-day moving average, which comes in just under that 18,000 figure. Mitesh Thakkar is with us for a quick check on things. Mitesh, good to have you here. Nifty first. What do you make of this sell-off that we've seen so far?
So Prashant, I think I was expecting this, yesterday when we kind of towards the end of the day closed below 18,250, I said we will do a range of about 18,025, 50 thereabouts to about 18,350, and now we'll head towards the lower end of the range. So I think we are heading towards that 18,025, 18,000 kind of a zone. I hope that holds, and once that holds, I think we might actually then attempt the upper end of the range again. So it will be a choppy but a ranged kind of a movement. On the stock side, I have one sell and one buy. L&T is, I think, clearly breaking out with momentum, so that's a buy. Keep a stop below 1824 and 1900 or thereabout should be the first target here. And on the sell side is Cadila Health. That's a sell with a stop at 508 for targets of 490.
Okay, all right. Thanks a lot for that. Just want to point out that a couple of more stocks are now selling off, but there are some that are bucking the trend as well. So IndusInd Bank is really the stock of the moment. Look at the move there. 7% higher now on IndusInd Bank in big volumes, and L&T is not too far behind, 3.5% after very, very strong growth. It was an over 40% year-on-year growth in L&T's order book this quarter around. So definitely the street has given it a 2 thumbs up. But let's shift focus now to the commodity markets. Manisha Gupta, our commodities editor, is here with us. Manisha, once again, good morning. What's the commodity you're tracking now?
So now I'm looking at the metal prices because most of them have seen a decline. We have seen the steel prices fall to a 4-month lows, and that pretty much is the case across sector. And that's happening because you are looking at energy prices softening. Well, the natural gas prices have come off. You also are looking at the coal prices continuing to decline. Coal actually is trading at a 1-month lows right now. We have seen China come out with major measures here which have curbed the prices. So it is nearly 28% of a decline that we have seen in coal prices from its all-time highs. China says that they will investigate and regulate the illegal hoarding in case of coal, and that they also are launching probe into the price index providers. So that has led to coal prices coming off. If you look at the prices itself, we are just about holding $218 to $220 per ton there. All-time highs in case of coal have been at $269, and that has happened in the month of October itself. So this month we have seen very sharp declines come in for coal. And remember, while most metal prices have eased off because of this, aluminum, where you have 40 to 50% of the production cost coming in from energy, aluminum prices have declined quite sharply. So it's trading at a 7-week lows on LME, and the prices from last week of $3,170 per ton are just about holding $2,750 at this point in time. Yesterday aluminum prices declined by 5%, and we're looking at 2% of a decline in the markets today as well. So 7% down in last 24 hours. In Shanghai as well, the aluminum prices are now trading at a 2-month lows, and that is because we have seen the Shanghai inventories at the highest in last 4 months. It actually has happened in the last 1 week itself that we have seen a lot of inventories actually come onto the exchanges warehouses. So whether it has been LME or Shanghai, a lot of inventories from the fragmented markets are coming in on the exchange both there. The other thing to watch out for is a poll that has been done in sense of the global available supplies for this year. While we are working with a deficit of around 890,000 tons, it's expected that as supplies start to come into the markets and demand goes down, we perhaps are looking at 400,000 of a deficit in the next year. So on a longer term as well, there are not too many people who are bullish now in case of aluminum. They said that the peak in case of aluminum has been done, and from here it's going to be some consolidation or even declines.
Okay, all right, Manisha, thanks a lot for that. By the way, for starters, the metal index itself is the biggest loser. That's one's taking a hard knock in today's trading session. And just take a look at the Nifty. Any kind of bounce, a 15, 20, 30 point bump is getting sold into. Now we're down to around 18,070. So it's not looking very, very great. Getting into this expiry day, we had a bit of an issue because the FIQs, well, they were selling in the cash market. In the futures market, they were shorting in futures as well as writing calls. But let's talk about one of those frontline stocks then. Titan. Well, it was an operationally strong performance coming from Titan in the second quarter, as the gross margin was the highest we've seen in 6 quarters, while the eyewear EBIT came in at a record high. To understand the past quarter, what's the way ahead, we're joined by Mr. Ashok Sonthalia, the CFO of the company. Hi, Mr. Sonthalia. Good morning, sir. Thanks so much for joining in. Well, I was looking at your numbers. They look fairly good. For the time being, the market reaction is something different. But let's understand the way ahead. You know, the first half of this fiscal, if I compare it with the first half of FY20, you've shown a growth of close to around 5% odd. So for the year, what kind of a revenue growth are we looking at? And also give us a sense about how is the festive season shaping up. Go ahead, sir.
Yeah, hi. Thank you very much for having me on the show. You know, as you rightly said, that now we are kind of firmly on the growth trajectory compared to FY20, you know, which was a normal pre-pandemic period. And most of the segments have done very well this time for Titan Company. Not only jewelry, watches, eyewear kind of clocked highest profit margin and a very, very decent profit number. Even other businesses have been doing well. And if you look at Carrot Lane has actually grew in Quarter2 95% from the year and year before. Year before actually it is almost double. Only one part of our portfolio, I think, which is engineering and automation, while they are winning the highest orders, but because of the semiconductor shortages, etc., and supply chain issues, they are not able to dispatch and execute. So overall, Titan, very, very strong portfolio-wise also performance. All businesses are doing well. We believe that going forward, festive season, we are very, very optimistic. Momentum is kind of momentum is good at this point of time as well. If you look at consumer confidence with the vaccination levels, etc., at a very, very high level is back. Even the savings which they have, you know, in last 18 months, are not able to spend. So wallet of share is coming in our favor, it appears to us. The other thing, you know, which reverse migration happened from metro to mid-India, Bharat India, other tier 2, tier 3 cities. You know, we are finding those markets are doing extremely well.
Right. You know, Mr. Sonthalia, you're sounding very, very confident. But what kind of a band can you give us in terms of growth if for FY22 that compares with the FY20? For the first half, it's a 5% growth. End the year with what? 8%, 10%, 12%? So, what could it be?
Prashant, we are not giving numbers, but as I told you, Quarter3 has started very well. And while Quarter3 last year also was very strong, but we are on the growth trajectory from there. And all signs, external as well as internal, all factors seems to be heading towards positive direction. So we are very, very positively inclined towards a good closer for it.
Mr. Sonthalia, good morning. That was Nigel, and this is Sonia here. Prashant will also join in a bit. I just had a couple of questions. You know, I think the reason why Nigel is asking about the growth trends is because now we've seen weddings come back in a big way as well. And your own plain jewelry business has recorded a higher growth than studded jewelry. So can you do better than what you expected perhaps a quarter ago? And can you give us any more color on how consumer preferences have changed? Is it just pent-up demand, revenge demand that is kicking in right now? Or do you think these kind of growth rates are something that could sustain through the end of the year?
So, you know, right, growth rate of 60%, 70%, which we have kind of clocked in Quarter1, Quarter2, of course, they are super normal growth rate. Bases were pretty low compared to FY21 base was very low. And with FY20 also almost 60% growth, but those numbers I don't think are sustainable. Some normalization would happen, but it is just not pent up. You know, there is some element of that, but I believe the formalization of the sector, people connecting or preferring, you know, connecting with the brands, they have, you know, now and gold coming back as a store of wealth value, that getting even more pronounced when people are looking for certain aspects of that. And over and above, Titan's ability now to micro target its client, because we have such a rich data about our client, you know, and our omni digital getting mature, and of course together with the store network expansion. So our ability to kind of grow on a well good pace is definitely strengthened.
Okay, just one follow-up there. If you can give us the exact market share gains that Titan has seen, because, you know, the common theme is that post the pandemic, a lot of organized players benefit and unorganized players have ceded market share to organized players like you. What exactly is the market share gains that you have seen right now, and what is the absolute figure?
So Sonia, you know, like there is no industry-wide source or number. What we do actually through our field, we understand what the organized, which are at regional level or national level, how they are doing. And there we have some good sense of it. I think the entire jewelry industry has done well, but the dispersion of growth could be, to my mind, 20% to 60-65%. And we are at the higher end of the growth of the industry. So that gives us confidence that we have gained market share from the regional and national players. How much putting percentage is very, very difficult at this point.
Okay, all right. Give us a few more numbers or a few more insights then. This ratio, I think it's moved to around 30% approximately. On year-on-year basis, it compares to around 26%. But it's still a distance away from the pre-pandemic levels. So how long before we get to that maybe 38-40% odd mark? Or is this a new normal, 30 to around 32% odd?
So no, I would, you see what happens, we are highest studded ratio jewelry company, and our focus is always to bring out new collections, new design, new mix to kind of attract customer and develop a studded market. But at the same time, gold is also doing extremely well. And Titan, for the purpose of getting the mix again back to 40%, we will not slow down our gold, kind of selling efforts. So it's matter of ultimately a maths. Both are growing very well on absolute basis. If you look at, both are contributing to kind of good gross margin and eventually good profitability. Very difficult to say when it will come back to 38-40% back. Quarter 4 is again for us an activation period for studded. So we will wait in Quarter 4 to see how much from 30% it goes up. But our effort are on everything, like weddings, gold, studded, and eventually, consumer is preferring gold a little bit more at this point of time. But as prosperity is going up, people have started coming into studded. I see a good future for studded gold.
Okay. Have you also noticed a change in the way people buy? I mean, are you seeing more people buy online through your digital channel? Because you are now sitting at almost 13% of sales from the digital and omni-channel route. Do you see that pick up further? And will that lead to you changing your strategy on the brick and mortar side? I mean, will you go slower in new store additions?
So in the first half, 60 stores in different formats, 15 for Tanis. You would have seen that data. Rest of the year, I believe at least 20 more Tanishq stores would come, which will take us to 35 for the year. Even for other businesses like watches and eyewear has eyewear particularly has a very, very strong plan for network expansion. We are seeing that both has a place in this now new omni world where customers start somewhere and end somewhere. In jewelry, still, I would believe physical retail has a great role to play, while remote, digital, everything is progressing. And now we see many high-ticket sales concluding completely online through video calling and all those stuff. But still, to my mind, retail has a value. Retail is a good brand ambassador for the, for any brand. Whenever Tanishq store is open, it has a good I think, connect with the catchment and creates a goodwill for the brand. So I don't think we are slowing down on brick and mortar. We are progressing on both fronts quite systematically.
Okay. You briefly spoke about the eyewear segment. Well, the margins out there were a pleasant surprise. Can they hold on to these levels? Can they improve from here? Or will you continue to invest more and we'll see some tapering off in terms of profitability?
So they will be good, profitable business. I would not say they will sustain at this level, because when they are expanding their network, they need to invest also on the brand visibility, etc., and some more investment. But over the period, last 6 quarters, they have worked very, very systematically to structurally change their margin profile. So they are going to be profitable, good double-digit, high double-digit, I would say numbers in the profit we will see, but some investments is also required in the next 4 to 6 quarters. Yeah.
Okay, sir, it was a pleasure speaking with you. Thank you for engaging with us and telling us what the future of Titan could look like. The stock, though, is under a bit of pressure, but it pales in comparison to the rise that the stock has seen. Exponential rise in the last 12 months. The graph will be up for you on your screen. But Marico came out with its, or rather is going to come out with its numbers. Mangalam is here to help us prep for that. Mangalam, how does the quarter look?
Well, this quarter looks good because for Marico, we do have, a cheat sheet already. The stock is up for 40% this year. And what we do know is that the India revenue growth will be in 20s. At the same time, there would be double-digit 2-year volume compounding. That's not all. The parachute vertical is likely to grow in line with their medium-term aspiration of 5 to 7%. Most of the street is working with a 7% growth out there. Value-added hair oils, which is a more margin-accretive business, will see high double-digit volume growth, and that will come off a low base. Edible oils will be an impacted quarter for them. That's primarily because one, high base. Same time last quarter, a lot of people were stocking up edible oil because of the pandemic. And secondly, there would be a high price of edible oil as well, so that would impact their performance out there. Foods, their growth area will grow well, on target to close this year at around 500 crores in revenue. And margins, that will dip year on year even as raw material pressures ease quarter on quarter. So gross margins are likely to improve quarter on quarter. Put all of this into what the street is working with this time around. 20% growth on the top line, 2375 crores is what the street is working with. EBITDA grows just 7%. That means it's a margin compression of almost 250 basis points, 17.5% out there, and the net profit grows 10%. The number you're looking at is 300 crores.
All right, thank you very much, Mangalam, for joining us and getting us those details. Marico in focus there. We'll take a very quick break here. What we'll do is we'll come back. The market, by the way, is down 136 odd points, but we've got a very special conversation lined up with Mohammed Appabhai, Managing Director